The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady, and we're going to talk taxes, and we want to make sure that you know what's happening in your financial situation so that you don't overpay your taxes. And, of course, on this lovely Saturday, I got Chris Fabian joining me in studio. Hey, Chris. Hey, Join.
Hello, Esther.
Hello, Christopher. And Tiff took the day off.
Tiff took the day off, went to the blueberry tree house with their daughters. So
now, what is the blueberry tree house?
it's a big blueberry farm.
Oh, that sounds fun.
Yeah, they have a restaurant. They have different little activities. So I think it's the second year that they've been in business with this.
What do they just have, like blueberry muffins? I know your wife loves blueberry muffins.
Yeah.
Anyway, I'm Esther Gulius, the Tax Lady, 8030930, 8030930, star 930 on the cell phone, 716-8030930 if you want to text us. And you went to the Bills scrimmage last night, right?
Went to the scrimmage. It was a great time. Lots of traffic. They got to work on that timing. Holy cow, it took me an hour and 15 minutes to get there instead of a normal 30 minutes.
Down at the Ralph, right?
Down at the Ralph because the time.
Have they started construction yet?
Yeah, there's a big hole in the ground across the street.
Good. That's good. Okay, so we're going to talk about taxes and things that are happening in the wonderful world of taxes. If you're getting letters from the IRS or state of New York, don't just pay what those letters are generated in such a way that it looks like it's a bill. It really isn't a bill. It's the initial proposal of what they see that's different than what you put on your tax return. And before you pay that, make sure you give us a call. There's no charge. We'd be very happy to look at everything because many times, if not most of the time, they're incorrect totally or at least partially incorrect.
Right. I just had a client. We amended the return in December. It had to go paper because the IRS's computers were off, and they never processed it. So they got a letter saying it was like more than double what he should have owed.
But then you sent the amended return again, right?
Yep. So, I mean...
So he doesn't owe it.
Yeah, you got to just be careful. And
here's the other thing. I read an article the other day that says that the IRS has accidentally destroyed like 300,000 pieces of mail. So if you sent in an amended return and you haven't heard anything, and you go on the website at irs.gov where it says that you're inquiring about your refund from the amended return, and it says they haven't gotten it, well, then what you need to do is the ball's back in your court. You have to make sure you send it again.
Yep.
Right?
Yep. Oh, definitely.
Okay. 8030930, 8030930, star 930 on a cell phone. Text us, 716-8030930. Our tax school's coming up. So if you're interested in taxes, which to me is a fascinating subject. I think it's fascinating.
It is. It is.
Because it's so weird. I just love that it's so weird because here they come up with this big rule, but then there's all these exceptions.
Right. And, if you love people, you love helping people, it's a great thing to do.
It is. It is. Even if you don't work for us, but that would be our goal to get you in our novice program. It's absolutely important for your own tax situation.
Yeah, and I think we got another week left, maybe two for the basically buy one, get one free. So bring your friend.
Right, bring a friend, which is so fun. That's exactly how I ended up getting involved in taxes. My future sister-in-law said, come with me to this tax school. I said, I do not want to go to any tax school. She says, yeah, I think you'll like it. No, I don't. And anyway, I went. I loved it. And here I am 90 years later. Okay, let's talk about some of the things that have changed. Some of the other things that I read from the IRS is they are absolutely marching forward. Now, in July, our money is now in charge. The Federal Reserve is in charge of our money supply. and it's moving to completely digitized money. And what does that mean? And I know that they say no, but they keep moving towards this completely computerized money situation, which would mean there'd be no paper money. But then I heard the major proponent of the value of having a completely paperless money supply, and the person delivering the message said, think about it. If we think that you buying a pack of cigarettes is not a good thing, we will not release that money from your checking account. If we think that you're buying pornography, we will not release that money to buy that porn. If we think you're buying a gas car, we will not release the money from that. So what will happen is they really have ultimate control. And that if you go to the World Economic Forum and take a look at what they're proposing, you will flip. By the end of by 2030, they would really like that none of us eat meat. Now, I could probably use not eating meat, but that there should be 1 car per 1,000 people. And there should be 0 population growth. That's by 2030. It's very fascinating. Just Google World Economic Forum, and I think you'd be interested to take a look at that. This is where we are moving in that direction. That's the way it goes, and it's especially scary to me because senior people don't understand many times electronics.
Right. And how are they supposed to?
I don't know. I have no idea.
I mean,
I get the feeling like they'd really like us to put us on a log and have us go over Niagara Falls. That's my impression.
Well, I mean, I'm just thinking, how many seniors have flip phones or don't have cell phones, and that's your money, is your phone. You just boop.
Yep. That's true. I mean, and I was talking to some business leader the other day, and he said, we're already digitized. And I said, it's true. It's true, but we're not. There is no such thing as no paper money. So there are people that can go to the store now and still use paper money, which would mean that they aren't controlling all your expenditures. But if it all becomes digital, if it all becomes numerical, then they can control what you spend. And they have a complete accounting of everything you spend, which is kind of good when you think about the under-the-table economy. There won't be one, right?
Supposedly.
Well, I mean, how can they? Unless they're trading wampum.
They could be trading cash themselves, and they could buy everything.
But there is no cash.
Well,
they
have to come in and suck out all the money in your house.
Yeah, well, but if there is no central bank that's going to say that we're, you know what I'm saying?
I know what you're saying, but I'm just saying I could see people saying, I'm going to keep $100,000 cash.
But if there is no cash, if they don't acknowledge cash,
I know, but you could have a black market that trades in cash.
Well, I think
they deal with each other instead of dealing with. But whatever.
I think you have to go to gold, right? Anyway, I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. We're going to take a short break, and we're going to be back on the other side with some of the tax changes that are just coming up. Hey, to us, you are family. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. All right, some of the things that are changing, a couple, and the interesting thing, there are 2 changes in the tax law which were completely stealthy. You know what I mean? That
behind the scenes,
it was
no
behind
one
the
talked
scenes.
about.
And one of them was the fact that if you have an irrevocable trust and your assets are in an irrevocable trust, they're not going to get the stepped-up basis.
Yep,
that's one. And the other thing is, if you are somebody that has what's considered higher income and your wages are over $145,000, and you're using the catch-up provision on your 401k, from now on, that catch-up provision has to be in a Roth. It cannot be in a traditional 401k.
Right, right. So the government's making money off of you now because they're not going to get it. I mean, because then later you're going to be in a lower supposedly in a lower tax bracket.
Right. And so they want it now. So they're not going so the money that you would have saved by putting money into a traditional 401k, you cannot do if your income exceeds $145,000. It's got to go into a Roth 401k. So, and those were two stealthy things.
Yeah.
I mean, you had to dig for that. The other thing is RMDs this year. So if you're somebody that's over the age of 73 going forward, that's when you have to take money out of your IRAs, pensions, and other previously non-taxed pension plans. The penalty, though, has dropped from 50% down to 25%.
Which is good.
Which is good. And if you fix it right away,
they'll drop it to 10.
To 10%. So the RMD from now on, and they're supposed to be moving that forward again even more. It would be 73 before you have to start taking money out of your IRA annuities and pensions. Okay?
Yep.
Of course, the standard deduction is gigantic, and it's getting bigger and bigger. And that's what I think financial planners don't think about that when they're doing their financial plans. It's like they completely ignore the fact that the standard deduction, if you're a married couple 65 or over, is now $30,700 before you pay any taxes to the federal government at all.
Wow.
That's a lot of money.
That is a lot of money.
And if you're single, it's $15,700 if you're 65 or over. So, and you have to factor that in when you're doing financial planning, because if you really don't have much in the way of a pension plan at work, or you haven't set up much, that would mean your primary source of income would be Social Security, and that would mean that you could take money out of that IRA if you have one, most of it tax-free.
Right.
If you tax plan. Right?
That's right.
All right. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone, and I got Holly calling from Niagara Falls. Hi, Holly. How can we help you?
Hey, hi there.
Hi.
I just wanted to chime in. I'm glad you brought up the World Economic Forum, and Lauren Fix did yesterday, too. People need to start being aware of these globalist plans because they are unfolding.
They
Just
are.
like Agenda 21 and the bike path,
Have you taken a look on their website as to who the participants are?
Well, I know Klaus Schwab. You will eat
BlackRock. I mean, all these gigantic companies are in the part of the World Economic Forum. And it's interesting because I can't remember the initials for what these companies are doing. But like, for instance, Target, that was so negatively impacted by the rainbow stuff at the front part of their stores. And you would think, wow, you'd want to change that. But this score that the World Economic Forum is putting on businesses really has more to do with diversity and inclusion, and that's the score you get. And if you have a good score from this diversity and inclusion thing, then the money flows in from an investment point of view from big companies like BlackRock.
You know, it's more than alarming. China's already started the credit score. You get a house or you don't get a house based on your credit score, and whether you spit on the sidewalk or jaywalked, that kind of stuff. But Bill Gates, they've already started for India and I think parts of Africa, working with MasterCard to work on digital, in the body ID, because poor people shouldn't be able to have to lose an identification card or driver's license. And so this way, by putting it in the body, it's all scannable.
Digital, right.
But the point is the credit score system. And like you said, but what your friend was saying was that, well, people can under the table use the money. But what are you going to do with that money if you can't go to the store
and that's,
and use it?
I mean, once they have it so that everything's digitalized, and we were talking during the break with Frank here, and he said, well, then if somebody's going to go to Wegmans and somebody's selling cucumbers outside, just take your paper money, but it has no value. And then I could give you dirt and say, you give me your dirt, I'll give you my dirt. But without there being something that validates the fact that this is a tradable commodity,
Right.
right?
And frankly, we could go back to barter,
Yeah.
right? But that's rough. That's a rough life. Are we all ready to live like the Amish? Most of us not. And it is going to digital. It's globalist. It's an end world that God warns us about in the end times. It really is coming to the nobody. God warns in Revelation that no one will be able to buy or sell
without the mark. Right.
Yeah, and that's exactly what these globalists, they're
and it's the thing is, if you're somebody who believes in the Bible or not, go to the World Economic Forum and take a look at their website. They unabashedly lay it all out for you.
Oh, yeah.
Unabashedly.
They got hubris. They have no qualms about telling us we're going to eat bugs. They had
That's
Angelina
right.
Jolie.
You're just going to get the high protein from the cockroaches.
Oh, yeah, and it all comes down to what? Climate change, saving the world and the climate. That's their blanket
But I
statement.
think really, don't you just think, Holly, that it's not really that they're worried about the climate. I think they're just wanting
it's
power,
eugenicist.
and this is a crisis that they can muster up.
And if we
not
don't,
that you
if we
shouldn't
don't
take
fight
care of the
against
climate. Don't get me wrong.
Listen, and Agenda 21 comes into it too. People need to be aware of Agenda 21. I know they give it different names now, Agenda 2030, but they're admitting now to spraying the skies for solar radiation management because otherwise we're going to all burn up and nothing will be left. But if we don't push back enough on this,
but nobody's pushing back. It's like, anyway. So thank you, Holly, for your comments. I agree with you, girlfriend. Again, World Economic Forum, go to their website. People would be very surprised to see what's on there, right?
And check out the word technocracy. It's not what it sounds like, and that kind of explains a bit of all this too. But just in our area, they doubled down on we're going all electric ovens after people died.
That's what's so interesting. People are saying, "Oh, the world's going to come to an end because of climate." But let's face it: if there's just all electric everything, we're all going to die because there's no electricity enough to support us during the blizzards we have here. And so, Anyway, okay, Holly, thank you for calling.
All righty, God bless you.
Thank you.
God bless.
Bye bye. Yep, it's true. I mean, it's just unbelievable what's happening, and it's right underneath our noses, and everybody says, oh, that can't be true. Well, until they pass it. I'm Esther Gillius, the tax lady, 8030930, 8030930, star 930 on a cell phone. Yes, sir.
Just think about the warnings on cigarettes, right?
Oh, did you see what they're doing in Canada?
But I'm just saying, smoking's not bad. I won't believe it till it happens to me. It's going to be the same thing with the currency.
But do you know what they're doing in Canada? On the cigarettes, they're stamping on the side, the white side of the cigarette. Cigarette smoking is harmful to your health. Every little cigarette has it. Not just a pack, every cigarette.
They're covering their butts so they can't get sued.
I don't know. All right. Other things that are, all right, so the standard deductions are going up. So here's the thing. If you are a senior couple and you have money in a previously non-taxed annuity or pension or IRA, and you take a look at the standard deduction of $30,700, and you don't have any or very little taxable income, that gives you the opportunity to take the money out of that non-taxed annuity or pension and make much of it, if not all of it, tax-free. And if you want to know what that figure would be, you can call us at the office. We'll ask you some questions, and we can tell you exactly how much you can take and not pay taxes on it.
Right.
And this way you can empty out your IRA, 401k plan, and not pay any taxes on it and put it away in an investment and use it at a later date.
I mean, even roll it over to a Roth.
Or you could roll it over
if
to a Roth.
People want to keep it, in the market, but keep it tax-free.
Well, again, and I think people don't understand that the Roth or the IRA or the traditional IRA is just the type of pension and annuity that it is. But it can be invested in a treasury bill, it can be in a stock, it can be in a mutual fund, it can be in a savings account, and still be classified an IRA or a 401k, right?
Right.
That's the way on which it's taxed is the IRA, Roth, or whatever. But the vehicle itself that's making the money could be a treasury bond, it could be a CD, it could be a blue chip stock, it can be a mutual fund. Any investment would qualify. But then you have certain restrictions when you make that contribution as to how much you can put in,
Right.
and how much you would take out. And when you take it out, it would be taxable, maybe. And understanding that it could be taxable, but if then you apply your standard deduction to it, you might not pay any taxes at all. So if you and your spouse have $40,000 in Social Security and you have no other form of income, how much will you pay in taxes?
Nothing.
Nothing, because your Social Security would be, you'd be at $20,000 until you get to 32. It's not taxable. So if you took another $15,000 out of your IRA, how much will you pay?
Nothing.
Nothing.
Yeah.
And the thing is, it requires you to do something to take advantage of this. And if you need help, you can call EG Tax at our corporate headquarters or go to our website at egtax.com, ask the tax lady, and we will we'll schedule something and help you. I'm Esther Gillius, the tax lady from EG Tax. We're going to take a short break for the news. We'll be back on the other side. You are family. I'm Esther Gillius, the tax lady from EG Tax, here on Saturday for like 20-some years. Haven't we been doing this a long time?
Long time. I remember
You
starting
must
on
have
a
been
Sunday.
in diapers. I know I was. This is my anniversary of being 39. My 30th anniversary of being 39. Anyway, so we were talking about IRAs, and somebody texted us, what's the standard deduction for somebody under the age of 65? If you're single, it's $13,850 this year. And the same thing goes in your situation. If you have Social Security of maybe $20,000 and that's your only source of income, you won't pay any taxes if you take $3,000 out of your IRA, because your standard deduction is high enough that you won't pay any taxes. Looking at my example of the married couple that had $40,000 in Social Security, and they don't pay any taxes, and they have an IRA that they're waiting till they're 73 to start withdrawing. If you took $15,000 out for the next 10 years, if you had $150,000, you would pay zero taxes, and you get all that money out. Now, when Chris was talking about maybe rolling it over, if you roll over the whole thing into an IRA, if it's $150,000, that would not be a good thing to do.
Right. But if
it'd be that incremental thing.
Right, but if you took that $15,000, moved it into a Roth, you're not paying tax on it, but now you moved it where the earnings will be tax-free and it's still growing.
Right.
So,
but here's the thing. We can't help you if you do it
wrong.
and if you don't do it. If you don't do it, there's nothing we can do.
Yep.
But if you do something, you will be rewarded. You know, there's an old saying, if you continue to do what you're doing, you're going to continue to get what you got, right?
Yep.
And it's true. If you want to change if you want to change your result, you got to change what you're doing.
Yes.
All right. Now we have somebody that said what?
Might you be able to talk a little about the tax laws one should know about for an inherited Roth IRA? Does the inheritor have 10 years to pull out that money? The financial guys mentioned this change.
Yeah, that's correct. It's any IRA.
Yep.
If it's an inherited IRA, whether it's traditional or IRA.
As long as it's not
Roth.
your spouse.
Right. Because and a spousal rollover goes directly into the spouse's account, and they don't have to take it out over a 10-year period. But there is a little dance you have to do if it's a younger person.
If it's 10 years, if you're related to the person and it's a 10-year age difference, or less, then you can do it over your life.
Over your life expectancy.
Right. If it's a minor, they have to their 21 to start taking it out. So there are lots of little turns, and you know.
So before you go and take money out of your IRA. It's interesting. A very close friend of mine had inherited about $83,000 in an inherited Roth, and went to the bank. And the banker said, "Well, why don't we put it in an annuity?" And so they cashed the whole thing in rather than rolling it over and put it in an annuity. And this person ended up paying all the taxes on the
Annuity.
on the IRA, and now it's in an annuity. And so it's so stupid.
It was in a Roth IRA?
No, it was in a traditional IRA.
Oh,
Right.
yes.
Yep.
Yes.
So you have to be before you do something, give us a call.
Right, definitely.
Because then we can steer you from making a catastrophe.
Even if you're at the bank or you're a financial person and they're like, no, you can't do that. Well, wait, I talked to Esther. Let's get them on the phone too. We'll talk. You got to be there. Give us permission to talk.
I had a client last year, was April the 18th or whatever the last day of tax season was. And he isn't working. His wife is. So I said, why don't you put money, $6,500, into an IRA? And so he marched off to the bank, and the bank says, oh, you can't do it. You're not working. And he said, well, Esther says I can. And she said, no, she has not. She's doing. So I called her up, and I said, that's called a spousal IRA, and it is deductible. He can do that. Oh, I didn't know that. So, if it isn't making any sense, call us back.
Right. Yep.
Okay. So other things, other changes. And again, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. Earned income credits are higher this year.
Imagine that.
More money for people. It's up to $7,430 on the federal for 3 or more children. And then on the state of New York, how much do you get for that? Is that
20%?
20% of the $7,400. Yeah. So that means that you're going to get almost $10,000 if you made maybe $12,000 working. You'll get almost that entire amount from your income tax refund.
I had a caller this week, and I was trying to be so nice. She's like, am I going to, if I file, will I get any money for my children? I said, well, how old are your children? She said 3 and 1. I said, well, are you working? No, I don't work. I said, well, then I'm sorry. There's nothing you will get. Well, that's not fair. I should get money for my kids. I said, go get a job.
Did you say that, Chris?
I did. Ooh. I said, if you made $10,000, you would walk out with a refund between federal and state about $8,000.
Right. Plus the child tax credit.
That's what it was all in. Yeah. And I'm like, she goes, well, I don't know. I don't think I could make that money by the end of the year. I said, well, go make $5,000. You'll get $4,000. Right. Well, it's not fair that they're not giving me money for my children.
I mean, did you see what happened down in New York City yesterday? Somebody was giving away something for free, and like thousands of kids on social media came to see this. And there was this big riot down in New York City because somebody was giving something away free. The IRS gives you free money of $7,430 if you make and you got 3 kids, if you make between like $10,000 and $18,000. And if you make more than that, it gradually decreases. And if you make less than that, it gradually increases. So basically, if you're making a very low income and you have 3 kids, they're going to give you almost $10,000 between state and federal, plus $2,000 for each kid you got under the age of 17. I mean, so if you got 3 kids, that's another 6. So you're making $16,000 when you made $12,000 working. Hello. Plus you get free health insurance. Hello. Free and food stamps. So you're making like $30-some thousand.
It's yeah.
And you're and of course the earned income credit, the child tax credit, and any kind of welfare you get is tax free.
Yep.
Right?
Yep.
But the earned income credit is higher this year. There's an increased contribution limit on health insurance that you're paying if you have a high deductible premium. The gifting this year is now $17,000 per person per year. So you can give up to $17,000 per person per year and not have to do a gift tax return. Let's say I have an estate, Chris, of $400,000. And this afternoon I go home and I want to give it all to you. What terrible thing's going to happen to me?
You got to fill out a paper form.
Right.
You got to fill out a 709.
Right.
Which costs you nothing in taxes.
Right.
It's called a gift tax form.
And what happens to you because you got $400,000?
Nothing.
Except that you'd be a very happy man.
I would be very happy.
Right. So your estate exclusion is now $12,920,000. So if your estate is under that figure, you can gift away up to that figure and not pay any federal estate taxes.
Right.
So a lot of people say, "Oh, I wanted to keep it under the $17,000." The only thing that you're saving is the paperwork that we'd have to do to report to the Internal Revenue Service that you gave a gift of over $17,000. That's only going to adjust your unified exclusion when you pass away. And if your estate is under that almost $13 million, you don't have to worry.
Right.
And anyway, you wouldn't worry anyway because you're not here to see it. But you know, you want to do the right thing. All right. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. What do we got there?
It's the same thing. What is this? I might have missed it. Sorry. What is the standard deduction for a single under 65?
All right, it's $13,850 single.
Right.
Married, a married couple is $27,700. If you're married and you're 65 or older, then it's $30,700. If you're single and you're age 65 or older, then it's $15,700. Okay.
Yep.
Okay. Let's see what else we got here. The stepped-up basis, we kind of mentioned that before, on inherited assets from an irrevocable trust is eliminated due to a revenue ruling.
Right.
Right?
Yep.
We talked about that. So if an asset is in an irrevocable trust and you think that there's going to be a stepped-up basis, that has been eliminated.
Right.
And you can just see these little tweaks going on, you know.
Yeah, and I would say call your estate lawyer. Sit down with them again.
When Jeff was here, did he say anything much about that?
There is some little caveats that it doesn't impact it, and there's some that it does.
Well, when I read the law, it said that if it goes through your estate, then you get the stepped-up basis. But if it doesn't go through your estate, it does not get the stepped-up basis.
But definitely, he said
but
call
the
him.
important thing, and that's look at that. Said thanks. What's really important is that don't think you know from what we're saying on the radio. We don't know your exact situation. Everybody's situation is different, and you can't just say, well, Esther said it's not taxable, or Esther says it is taxable, or Esther says I won't get a stepped up basis. Your situation might be different, so it's always best to check with your attorney if there's any question.
You could have a room of 1,000 people, and if each one of them had a trust, it could be written 1,000 different ways. It's not a set boom, boom, boom thing. A, then B, then C, then D. Everything is different on every trust because you get to set the guidelines.
Yeah, and let's say you set this thing up a long time ago and your attorney is no longer in business or maybe passed away, get a new attorney. You can if it is irrevocable, then they'll tell you if there's any way to unscramble the eggs.
Correct.
All right. I'm Esther Gullius, the tax lady from EG Tax. We're going to take a short break. We'll be back with your questions and comments after the break. I'll talk to you on the other side. Hey, to us, you are family. I'm Esther Gullius, the tax lady from EG Tax. And Christopher Fabian is with me in studio, and we're talking taxes. We got a text from a couple that I know very well. I think she's crusading for a Tesla. So she said, how much money can I get back if I buy a Tesla? Oh, this would be from her husband,
Yes.
from Al for Becca. Well, just number one, there's 2 criteria. Well, actually, there's like 3 criteria. If you make more than $300,000, you don't get anything under the new energy
Married
credit.
filing joint.
Right. $150,000 if you're married filing separate. And then the next thing is the vehicle that you buy, I think it has to be under $83,000.
83,000.
$83,000, and it has to, as the criteria is the battery. I don't know, the battery power, the
It's
battery.
ridiculous, but it's
and
only
the minerals. It's got to have the right minerals from from North America, assembled in North America, and it has to be under $83,000. I don't know if Teslas are that cheap. Are they?
and
that cheap?
I have no idea, but it's only Tesla's Model 3 and Y are the only 2 Teslas that qualify.
Yeah, and that's what I would say. Why would you buy a Tesla? Why would you buy a Tesla? Anyway, I'm Esther Gullius, the tax lady from EG Tax. Don't forget our tax school starts in October. And I want to tell you, it's absolutely a great course. You will learn so much about taxes. Now, nobody can really retain all of the facts and figures and numbers, but it gives you a really great foundation to understand what we talk about here on Saturdays. Right, Chris?
Right.
And if you're interested, you can call us up and we will send you the forms through the mail, old-fashioned way. We'll email them to you, a little new fashion.
You can
You can go to our website, which is completely new fashion, and you can register online.
Right. You know, and even if you're a small business owner, it wouldn't hurt to take the course so you understand
Oh my
what
gosh!
it means.
From a small business owner's perspective, it really is important because we teach you things like when you can do expensing, you can do special expensing for assets and how that works and how your FICA is computed on the net profit, all kinds of things which are really important from a business owner standpoint.
Right. Even a rental, if you own rental properties, because you don't want to work. So you buy rental. I think you work more
You work
on that.
harder than ever.
But there's different things for that. You're not paying into Social Security. So you're not, you might be saving money on your tax return, but later on in life.
We have several clients that have multiple units of rental units. And the rental, the net profit from a rental, you don't have to pay Social Security taxes on. Well, that's good while you're young. But as you start to age, you start thinking, gee, I would really like Social Security, but you never paid in.
Right. I know. We have this one guy. He's only had rental properties. He's like 10 quarters short, but he's disabled. He can't work. He doesn't qualify for Medicare.
But does he have a wife?
No.
Oh, he needs a wife. Because if he had a wife, then he could get
If
her,
she
half
had
of hers.
Yeah. But the
And
big
that's
thing
what a
is
lot
the
of people
health
don't
insurance.
know. Pardon me?
He doesn't have health insurance because he doesn't qualify for Medicare. If he wanted health insurance, he would have to pay full price.
Wow. But he gets Medicaid. He has to get
No,
Medicaid.
he has the assets. He has all the rental
He's got-
properties.
oh, my gosh. Okay, but anyway, here's the thing. If your situation is kind of complex, like let's, for instance, my rental guy he's making money, but he hasn't paid into Social Security. Your spouse, if they worked and had more than 40 quarters, you can piggyback off your spouse's Social Security and get it.
Right. You could also
Same thing for ministers, by the way.
You could also incorporate your
And then
rental
and
take a
put yourself
paycheck.
on salary.
Yep.
Right. Have the corporation own the assets and pay you a salary, and then you'd pay FICA.
Yep.
And then you've got to work for 10 years, though. Okay, the other thing is, if you're somebody... Now, the Fed just raised the prime lending rate again this week. So that means that they're going to be paying even more on CDs. So if you're somebody that keeps a large amount in your checking account and you're getting nothing because it used to be a year ago there was no money that you'd make off of a money market account. Well, now there is money. You'd be surprised. In a money market account, I know American Express, I think, is paying 4.25% on just a money market account, which means there's no time limitation, and there's no restraint on if you needed the money. Now, if you go into a CD, you can get like 5.6%. Some of them are going to be, I would think, by the end of this week, 6%. So you want to make sure that you maximize the amount of money that you're making off of your investments. The way it was isn't the way it is now. What are you laughing at?
Just make sure that cash is still being used.
Well, they haven't gone that far yet.
Sorry, just going back to the beginning of the show.
All right, and so let's say that you say, well, Esther, I would really like to get 5.5%, but I'm in a 1% CD. Break the CD. So if you had $100,000, just to make math easy, and you're getting 1% because it's an old CD, the penalty for breaking it usually is 1 year's interest, which would be $1,000. Break the CD, pay the $1,000 penalty, and then sign up for your 5% CD. You'll make $5,000, which is a lot better than $1,000, and so you come out $4,000 ahead.
Plus, the $1,000 penalty is a deduction on your tax return.
That's exactly right. Exactly right. And so the important thing is you have to do something to get something.
Yep.
And so if you would like to stop in our office, you can sit down with us and we'll help you strategize a plan. Talk to your financial planner. Your financial planners, if you're afraid of the market, they offer CDs. Right? These stockbrokers can get you certificates of deposit. But I'm going to tell you something. If you're in a low-yield account, and by the way, you have to be really careful. I saw something the other day on the Internet. It was interspersed with all these higher rates. So it was like this bank was paying 5%, this paid 5.25%, this bank was paying 5%. Then there was another bank that was paying 0.05%. If it's 0.05%, that's 0.5%. So you make sure that you're reading the advertisement correctly because you might be surprised. It's not 5%, it's 0.05%.
Yeah.
So you got to be very careful.
Yes.
So the important thing is make money if you possibly can. All right, anything else that's going on as far as letters from the IRS, state of New York?
Well, New York, we're seeing the letters saying, hey, you might have to amend your return from 2020 because we saw something from the IRS. So they're not just automatically changing your return now. They're saying you might need to double check it. So at least they're not sending bills out. They're saying.
So are they thinking about the unemployment then? Is that
no? It's just anything that the IRS changed. It could be you forgot your stocks and you just paid the IRS without
So why
amending.
would the IRS not have sent out a lead letter?
No, the IRS did 2 years ago.
Oh,
New York
okay.
State's finally catching
All
up
right.
on it.
All right,
but instead
that's another thing to say. If you're paying, because let's say you got a letter from the IRS and you did leave something off your tax return, and so you amend it and put it on, make sure you automatically do the state of New York as well, because the one piggybacks off the other.
Right. And New York will catch up to it.
They will, and when they do, the penalties and interest are really high.
I was just going to say they wait a couple years and they hit you for more interest and penalties. And that's one of the things, too, is you can always try calling. The IRS may be right. You may have forgotten something and they hit you with the big penalty. You can always try calling them and getting that abated, the penalty. They won't waive the interest, but they could waive the penalty.
So what do you say to them? Do you give them a sob story?
You can give them a sob story. I'm sorry, my mom was dying and I forgot all about this. I didn't, it's sometimes they even say, well, we'll let you use your one-time in your life exemption for this and we'll just waive it. Just don't let it happen again.
Right.
And, it all depends who you talk to.
And again, if you're feeling intimidated by talking to the IRS, you can call us. We can do a 3-way call.
Yeah, and I know we had somebody, I don't know if it was my wife's client, but it was the wife wanted to file it separately, and he said, no, you're filing joint. And she's like, no, we're getting a divorce. I don't want to file joint with you. And all of a sudden a return got filed and they owed money and she got a bill. And so you can do an innocent spouse.
Right.
Not an injured spouse, and you would have to prove it's not your signature or you were forced to sign.
There's forms that you fill out and you send to the IRS and say, I did not agree to file a joint return. And the burden of proof would be on you to prove it. But if you do prove it, then that return that was fraudulently done would all be his. I'm using his. Shouldn't use his. That the other spouse's responsibility. And what kind of penalty do they get? Do you know any? Because it'd be fraud.
It would be fraud. Yeah. Return. So I would think they would go after them full fraud.
Right.
But just don't pay a bill. I mean, we can't stop saying that enough.
And then the other thing is, remember, this year, if your wages are over $145,000 and you're over the age of 50 and you're doing a catch-up provision, under the change in the law this year, you have to put that catch-up provision into a Roth 401k as opposed to a traditional IRA. And so that means if it's $7,500 that you have to put into a Roth and you're in a higher tax bracket, like 30%, you're going to have to pay an additional $2,250 in taxes. And so that's another change.
I mean, even at the 24% at $6,000, that's $1,400.
Right.
Not to mention New
York
State.
So they get it up front rather than waiting.
Yeah.
And that's why many times people are putting money into a Roth and they really shouldn't. Sometimes they should, but many times they shouldn't, and that's something that we can help you with. In the meantime, if you have any tax questions, you can go to our website at egtax.com. Ask the tax lady. I answer tax questions all the time. Very happy to help you. Sometimes I just say, please call the office because it's too hard to answer. There's all these details you have to get, Yep. So if it's a complicated question, just call the office at 632-7886. The rest of the time, I'm very happy if you just use our website to go through it. Until next week, I hope you have a wonderful week. Enjoy the rest of summer. I'm Esther Gillius, the tax lady with Christopher Fabian. Thanks for listening. Have a great week. Bye-bye.